Good morning, everyone. It is Wednesday, very early morning of April 29th. For those of you that don't know, my name is David Mott, financial advisor here at Nexus One. Here to give you a little insight on what our investment committee is thinking about with the ongoings of the market, maybe move you a step to the left, move you a step to the right, and we'll look at these headline stories a little differently. A lot going on this week. It's a huge week. Earnings. A ridiculous portion of the S&P 500 is announcing earnings today. But let's dive right into it. A lot going on. Let's break it down. So S&P is up about 1% on the week, bringing the year-to-date total 4%, just slightly above 4%. A little bit of a pullback yesterday. S&P ending about half a point down, largely because of OpenAI. Revenue growth targets were missed, which has the market decently rattled. On this tech wave we've been riding for years, a number of tech giants are releasing their earnings this week. 5 of the Magnificent Seven are this week. Today, Wednesday, late in the day, we have Amazon, we have Meta, we have Microsoft and Google. If that's not enough for you, tomorrow we have Apple. Combined, those 5 stocks make up a nearly 25% of the entire S&P 500. So this matters. This matters. The tech has to post some ridiculous, near perfect earnings to keep this going. They have delivered so far. What investors in Wall Street are largely looking for is there's been a lot of investment when it comes to this AI and this infrastructure setup. It's now coming time to see how this can turn into actual dollars and revenue generating streams while keeping the growth rates. Even if some targets hit, some miss, this also starts to lay out maybe some winners and losers when it comes to these tech giants. See if there's anybody separating from the pack. One that our investment committee is looking very closely at is Amazon at the bunch, because it's in so many different areas, right? Has the increased cost of fuel trickled into deliveries? There's a lot of consumer aspect. Are people slowing down on the purchasing? Haven't seen it yet, but will we start to get that with the Amazon earnings? So there's a lot of moving parts here. It's the Super Bowl of earnings, folks. It absolutely matters this week, and it's something we are watching closely across the board. So on the economic side, we have a great happy Wednesday purple tie Fed meeting. Jerome Powell is slotted to give what is very likely his final address at the FOMC here at 1 o'clock Central, 2 o'clock Eastern on this Wednesday. Hit odds are very likely that he holds the Fed rate at 3.5 to 3.75. So not a lot of movement when it comes to your CDs, auto loan rates, home rates. It's very much anticipating that things stay the course. Washington did drop those investigative overspending charges on Powell, completely dropped, which leaves a clear and open path for Kevin Warsh to take the reins, very likely in next month's meeting. This is a good sign for the market. Don't want to go too harsh on Jerome Powell. There were some misses, but hindsight's 2020. But Kevin Warsh is what Wall Street deems as what we call a hawk, which means cutting rates is an increased probability, the lowering to have that economic growth. The naysayers against Warsh would say that lets inflation run rampant. It's the Fed's job to balance the two. But right now, Wall Street is anticipating a gentleman that is not afraid to cut those interest rates, and we are still baking in those 2 quarter point rate cuts, which could be a great tailwind for returns here in the back half of the year. But we'll stay tuned with that Fed meeting. Wall Street is going to read on every word Jerome Powell says. While we don't expect much news for the current, it's about getting any type of insight Washington and the Fed has on inflation. That is what Wall Street will be watching like a hawk. Not what he's saying, but what he's implying. Something we'll watch closely today, this afternoon. And so we talked a little bit last week about that crowd sentiment study that was coming out. To recap it, what is a crowd sentiment? It's how folks that buy stuff, you and me, feel about the economy in general, how happy or how discouraged we are. A lot of numbers came out, and as anticipated, we are seeing some record low crowd consumer sentiment, numbers that rival the late 70s. Now, you would think with that kind of discouragement, that the way people are feeling, that Wall Street would react. And we say this time and time again, Wall Street is not about feelings, it's about earnings. And as these earnings come up, a great example, Starbucks up 7%. While people in their hearts feel that they are somewhat discouraged with this economy and AI could replace them, it is not stopping people from buying brand new $80,000 pickup trucks and $5 cups of coffee. And so with that, when you're earnings focused, Wall Street analysts are absolutely seeing growth continue. So it very much is the mind not matching the heart situation. Even though crowd sentiment did come out lower, as we talked about last week, Wall Street shrugged it off because it doesn't change the buying patterns. So until consumers truly start to slow down the spending, Wall Street won't adjust. And I applaud Wall Street again. That's what they should do. They shouldn't be in the business of reading feelings. They should be in the business of reading numbers. And so with that, there's still a lot of geopolitical conflict going on. I can't believe I went this long without talking about the conflict in the Middle East. Not a lot of movement there. The conflict is going on. The blockade is still going. Strategy has shifted to be more of breaking the economic back. It seems to be a less a form of attrition in terms of loss of life and weaponry. So right now that blockade continues and it's become a waiting game. Oil is sitting at $95 to $105 a barrel, bouncing back and forth. So it's very much still a wait and see game, which side will flinch first. No doubt that geopolitical conflict is bleeding into that crowd sentiment, but ultimately it is not trickling down to the earnings that Wall Street is looking at and in their mind justifying this run that we've had in the market. Got to read the data as it is, not what folks are thinking and feeling. So with that, big week in the market. This is the Super Bowl for Wall Street. Many analysts are calling it one of the biggest earnings weeks that we've had in many years. Will the tech wave continue? Have these 5 of the 7 magnificent 7 done enough to convince investors that this party's continuing? Will this AI infrastructure continue to generate future growth, future revenue? We will find out here in a few short hours. Looking very much forward to it. If you have any questions at all about anything we talked to, by all means, do not hesitate to reach out to your advisor. Reach out to myself direct. Happy to deep further any of these conversations. Happy Fed Day. The Jerome Powell's last and final. We'll see you next week.